I'm going to focus on two broad chunks. First one is just a little bit general on PPPs, a few thoughts, and then on IFC's views on unsolicited bids. I'm not going to restrict myself to South Africa, but I think I'm just going to talk about unsolicited bids in general. Paul and then Anthony both have talked about the tremendous need for infrastructure in Africa. There's the enormous gap, and I'm preaching to the choir here. We've had figures from the AICD study of as much as $90+ billion a year, roughly half of that from government sources, still big gap. And even if you take into account suggested efficiency changes, etc., you still have somewhere between 20 to 30 billion dollars a year needed. The public sector can't fill the gap. So this 20 to 30 is really coming from the private sector. Public sector can't fill the gap, and there's a very small percentage today in Africa of projects that have that are PPP. If you take power, I think you've got something like 7% of total power projects are PPP projects. So clearly there is a fundamental gap there, a fundamental gap that needs to be filled. There's still, I think, a lack of clarity on what PPP is. A lot of times when there's a political desire to have a particular project, a pet project, sometimes a white elephant, it's often kind of 90% public and maybe 10% private, and the 10% that's carved out doesn't make any sense. We've seen projects like that. I think the title of PPP is put there because it seems more palatable, but really that doesn't work. Fundamentally, you've got to have projects that are sustainable. You've got to have projects that are economically viable. You've got to have projects where the government's getting some value for the money, and you've got to have it affordable. And the key thing in PPP, you've got to have appropriate risk transfers. And one of the reasons why you have governments wanting to partner with the private sector is that you want to have, there's a shortage of funding, which you hope the private sector can bring, but it's not just the funding. There's also management capabilities, there's also design capabilities, there's a whole bunch of risks that can be transferred where they're more appropriately placed, and that is the private sector. Coming to our own views on unsolicited bids, we've historically stayed away from unsolicited bids because of transparency reasons. There have been a number of cases where lack of transparency means essentially the deal isn't kosher, there is corruption involved, we're not comfortable with how the bids were awarded, even if they're unsolicited, what criterion were used, who the people were, what their background was. There's a whole host of issues. So we've historically stayed away because there was no benchmark. In recent years, we've begun looking at them more closely. And why? Again, the same reason, the gap, enormous gap. And so we're looking at every single way we can to try and fill that gap. Whatever little role we can play, the idea is to try and fill that gap. So what do we look for in unsolicited bids? Personally, I think we look for the quality of the sponsor. That's probably the most important. The quality of the private sector sponsor, probably the most important. Are these people or institutions with significant amount of experience in that area? So you don't want somebody who's the king of bread suddenly wanting to operate a toll road. Doesn't quite cut it, even if they have all the money in the world. So you obviously want somebody with a lot of experience in toll road, or in power, or in container terminal operation, whatever the field may be. Significant amount of experience. And we're not talking a couple of years, we're talking 5, 10, 15 years, a big track record, somebody who knows what they're doing, and have established themselves across the world, or at least across the continent, in running that sort of business efficiently. We look for equity. These are obviously people who need to put in the appropriate amount of equity. And we look for, I guess the third E, the ethics, which is we want to make sure that reputationally these people have a strong reputation. What this kind of seems to lean is some of the larger international firms, could be the AP Millers of this world, could be DPWs, could be a number of people, or in power could be the Allwishes or people like that. Again, people who have experience, where there is a strong inbuilt, I guess, drive towards corporate governance. A lot of those things, we tend to be naturally more comfortable. Obviously, the project needs to make sense. It's relatively easy to get comparable cost data, adjusting for the specifics of the country and the continent, you can get a reasonable sense whether the costs involved, whether the capital costs involved, the expenditure plan involved make sense or not. So if there is a project where you've got a reasonably good sponsor, where you've got reasonably sensible project economics, we'll take a look at it. And that's really where we're coming down to. We obviously prefer multiple bids, and we obviously prefer a solicited bid, but we're willing to look at those areas where we can get some comparables, get a handle, feel comfortable that this is consistent with practice elsewhere in the world in open bidding. Once we've crossed that bridge, I think then we'll begin to look at a whole host of financing options we can offer, and you've got really an entire variety. You've got obviously the whole alphabet soup of DFIs that can provide various forms of debt, senior, mezzanine, quasi-equity, equity. You've got partial credit guarantees. You've got advisory services. You've got infra ventures, which is essentially trying to build it up from scratch. So there are a whole host of financing options that are available. But fundamentally, the big issue in unsolicited bids is transparency and the capability of the sponsors to deliver. And apart from that, more generally, is this PPP structured sensibly? Does it provide value for money? Is it sustainable? Will this kind of withstand changes in government? You want something that's sustainable. These are some of the things we look for.
Doing business in Africa. You can't afford to be without Africa Investor.